Glad to have you join us. I am Omobolanle Adeshi. We begin with news that the federal government on Thursday declared that the country has lost its most valued crude oil customers, while some of its gas buyers now compete with the country in the same market. It also stated that international oil companies were massively shifting focus to alternative fuels as the threat posed by the push for renewables are seriously gaining momentum. The government disclosed this through its Nigerian Midstream and Downstream Petroleum Regulatory Authority at the opening ceremony of the Midstream and Downstream Petroleum Industry HSE Managers Forum in Abuja. The Chief Executive, NMDPRA, Farouk Ahmed, who was represented by the agency's Executive Director, Hydrocarbon Processing Plants, Installations and Transportation Infrastructure, Francis Ogari, urged operators in the oil sector to try and move along with the changes in the industry globally. He said the number of crude oil buyers from Nigeria had been decreasing, stressing that Nigeria must build its oil and gas sector collectively for it to survive the changes in the space. The International Monetary Fund, IMF, has said Nigeria and other countries in the sub-Saharan African region risk social and political instability and worsening food insecurity because of rising inflation. According to the IMF, inflation has nearly doubled pre-pandemic levels in the region, adding that while there is a significant difference between countries, the median inflation rate in the region increased to almost 9% in August. It stated that despite an economic rebound in 2021, the fallout from the pandemic has kept domestic economic activity in the region relatively muted, and it expects growth to slow this year. The Washington-based lender stated that unlike richer countries in other regions, most countries in the region lack the needed resources to support and stimulate growth. Listing some of the causes of the region's inflation, it said inflation in Nigeria and other sub-Saharan African countries was being driven less by economic activity and more by external developments. An analyst has blamed the current state of Nigeria's economy on the high inflation rate and unemployment rate. According to a chartered accountant, Akin Fatuke, while speaking to iBrandTV's Business Breakfast earlier in the day, against the backdrop of IMF's position on Nigeria's economy, the International Monetary Fund had said Nigeria and other countries in the sub-Saharan African region risk social and political instability and worsening food insecurity because of rising inflation. The fund explained that the region was besieged by slow recovery from the pandemic, rising food and energy prices, and high level of debt.
Trend of things, even when we were not expecting some of the big shocks that we have. One, we are being stolen blind by way of our capacity to export our crude and meeting the OPEC quota. Secondly, inflation at 20.77%, highest in recent, very recent millennial history of Nigeria. Also, it's happening out there, both in the UK, Britain, and other parts of the world. In fact, unprecedentedly. Whereas theirs are being controlled by ways, means, policy directions that are in convergence to making sure that they take their people out of poverty. The Nigerian situation is not following that trajectory. Unemployment is high, extremely very high, out of school children, and drug addiction, people who are roaming the wilds, the Yahoo are taking all over. By the time you compute that and put that on high inflation, you get what you call a mystery index. That mystery index is an indication that anybody that is facing that on a long-term basis might be looking at the big, what we all want to run away from, but I dare say it's a failed system.
The Central Bank of Nigeria paid exporters 42 billion naira for repatriating $1.28 billion through its official window. The Managing Director, Chief Executive Officer, Citibank Nigeria, Ireti Samuel Ogbu, during the Post-Bankers Committee meeting press briefing that was held on Thursday. According to the MD, the exporters, through the CBN's RT200, repatriated $1.28 billion for the quarter, out of which $870 million was sold to the INE window. The RT200 policy was introduced in February to raise $200 billion in foreign exchange earnings from non-oil proceeds in 3 to 5 years, Samuel Ogbu said. The whole idea behind this initiative was to diversify sources of forex away from the dominance of oil and to increase the contribution of non-oil export, to increase availability, and to support export-oriented companies to expand their operations and capabilities. Hit-and-run driver in policy guidelines, the CBN disclosed that its rebate scheme is designed to incentivize exporters in the non-oil export sector to encourage repatriation and sale of export proceeds into the forex markets. It added that the policy will help stabilize and sustain inflows of forex in a bid to insulate the nation's economy from shocks and forex shortages. Minister of Finance and Budget and National Planning, Zainab Ahmed, says she has received approval to scrutinize the Central Bank of Nigeria, CBN's 20 trillion worth Ways and Means portfolio. Ahmed announced this at the ministerial presentation of the 2023 budget at the Ministry of Finance headquarters in Abuja. She further disclosed that the government's contingent liabilities as a percentage of GDP in 2021 were 2.64%, down from 2.75% in 2020. It is expected that in this area by the end of 2022. She added that the target ratio under the MTD's 2020 to 2023 is 70 to 30, and that the Debt Management Office was expecting to achieve the target by the end of 2023. She added that the exposure to refinancing risk remained stable as a result of the strategy of issuance of long-dated securities in the domestic and international markets, in addition to assessing long-term funds from multilateral and bilateral lenders. However, the Apex Bank complained that excessive borrowing by the federal government from the CBN's Ways and Means advances window could frustrate CBN's monetary policy. Nigerians spent 2.18 trillion naira on electronic bills such as power, pay TV, and other utilities in the first 9 months of 2022, a 30.84% increase from the 1.67 trillion naira that was spent in the corresponding period of 2021. According to data from the Nigeria Interbank Settlement System, NIBSS. This is the first time electronic channels have been used to process over 2 trillion naira in utility bills. E-bills include daily bill transactions that are accessible and seamless with online real-time transaction reporting, biller notification, and easy reconciliation. According to industry expert, mobile adoption is key to the growth of e-bills payment, with individuals relying on the ease and speed of mobile devices. Point-of-sale terminals has also been attributed to this growth, with 955,234 deployed POS in the nation. Still to come, pound sinks as the U.S. economic uncertainty rises. Details and more news updates after this commercial break. We'll be right back.